Hello, everyone. Let's make a declaration together. Hi, Simon. Ryan, how are you, buddy?
Morning, Dale. Happy New Year.
Happy New Year. Good to hear your voice. Alexander, thank you for such a nice wishes for the whole team. Thank you very much. Okay, I'm going to resume share. And yeah, here we go. Okay. So I was talking to Blake last week, and we had that initial pop. Hi, Hugo, Sinatra, Austin. Nice to meet you, Ingmar. This pop that we had here last week was not a reversal week. We had a nice reversal day, but not a reversal week here. So we had the day, but we didn't have the week, but we're still diverging on multiple time frames here. So I'm giving it a shot down here, risking 60 right here. And really the story of the day, and certainly was an active day for a bank holiday, especially since it was about yields yesterday for sure, right? So we had a breakout in yields, and that caused the damage in precious metals, caused strength in the dollar, and now I think we are on our way to 2%. It measures about 190, but new highs are coming. That's the way it looks to me. And I said the last month I came in.
Hello, sir. Happy New Year.
Happy New Year, KMan. So look at what the end is. So, all the way through here, I said we needed one more high. I actually can't short it here, because of Mo. You're confirming the high there. You're confirming the high here. Confirming the high here. So it has to do some work or reverse. But these were the levels I was looking for. So we'll see what happens up here. I feel like there's more upside in yields than there is upside in US dollar yen from here. We'll see.
Yeah, we have to look at the longer term of the yields has been starting to move as well. So before it was like the short term, the 2 and the 3s, 5s ticking up, but now the 10s and the up to the 30s, the 30s as well. 205, 210 is a bit of a resistance area in the 30s, I reckon. The 10s are close to the 170 again. I was just updating in the room. I said there's a bit of a triangle on the 10-year from 2020 onwards, and the top end is around 170 again once more. But I'd love to see it break above 177 to really go like, all right, this dollar is going to really shoot in Q1. We are still only in the first week of the year, right? It's only the second year. And one day, sorry.
Yeah, it's okay. And one thing about yields, the market risk can handle it. If it's not, it's the speed of the rise. I mean, if we just blow to 2%, that's going to freak the market out. But if we kind of stair step out there up to 2%, the market could handle that.
Very right. Very right.
But you're the guy to explain it. Jason's asking me, came in, why do rising US yields kill the yen? How are they linked?
Because the 10-year especially is what Japanese investors trade the most. So when it goes up, they usually hedge a lot of their investments. They are the biggest US bonds buyers in the market, right? But if the yields go up, the hedging costs are getting more expensive. So they tend to unhedge a little bit instead of just doing swaps. They unhedge, meaning that the net amount going into dollars is getting bigger. So they pull the dollar yen higher, and it's become a very very active and very popular correlation over the years. The correlation between the 10-year dollar and the dollar yen.
If we go to 2%, KMan, where do you believe the yen would be?
There's a big level at 120 in dollar yen. A long-term FIPS coming together there at 120.
Okay, appreciate it.
Yeah, I'm talking my book. I'm long again.
That's okay. Well, we know every time you talk, you're trying to talk people into supporting your position.
No, not really.
I'm just kidding you, man.
Yeah, I know. I'm just saying what I'm doing. So yesterday I bought it again because I saw the yields rise and at the same time the stock's holding up.
Yeah.
And that's kind of a perfect cocktail for a weaker yen, right?
It should also be noted with yields that it's also from a global investor's point of view, money flows where the highest yields are, and certainly it's not in Japan, which are still pretty much under yield curve control, and meanwhile all the global yields are rising. So if you're a fairly passive investor, just want a bond yield, 1.8, 1.9%. You're going to go to the US and you're going to go to Europe, but you're not going to go to Japan for that yield. So it's another investment reason why we see money flowing out of the yen as well.
I think
and they just put in place another 30 trillion yen
So
stimulus. So
maybe it'll work after
keeping the rates low.
After 100 years, maybe it'll work.
See you then.
Doubt it, buddy.
That'll make you 200, Dale.
No thanks, man. Anyway, also Aussie kind of put in the dollar had a great day, and Aussie looks like I still think based upon the confirmed low that we're going to see another low. I know you don't want to hear that, Ryan, but just an opinion. I've been wrong a million times, so that's happening. Aussie lower and silver. I still think silver is going to take out this double bottom here, and that's a story. As Shy Girl would say, it's all about yields.
Yeah.
The one thing I would just, and then I let other people talk. The one thing I would just would like to add is that some of those moves are a bit of an unwind of what we saw at the end of the for over the year end, right? There's been a lot of dollars sold over the year end, like Aussie, Kiwi, Euro, Sterling were doing ramping higher without too much of a reason apart from end of year flows. And it looks like in the first couple of days we can never exclude part of these moves and part of these flows to be undone. So is this the real move? I think it's maybe a little early to tell, right?
Yeah, I agree with that. It's the same thing we've just been saying about yield. Just I said it earlier in the chat room. Unless US 10s are my guide as well, and unless we start seeing 1.7, 1.8 breaking, this is potentially still just in its range that we've been watching for a long time. We've seen lots of failures up towards 170. So if we get above 170, 180, then we might start to believe that this yield move is real, and then we're probably going to be pushing on to 2%.
Okay. Happy New Year, Stelios. How are you?
Hello, buddy? Happy New Year to everybody.
Hey, mate.
Okay,
how you guys doing?
Good.
Happy.
So I think you were happy to see them get to the metals yesterday because you're being patient to look for your add-on this year.
Yeah, it's something I'm waiting for, and I still think it's probably the most likely scenario that we get one last flush lower. So I've said this so many times. So I think 1680-ish, and that'll make silver, well, who knows?
2050,
21, maybe they could even push it towards 19.5. I don't know, but I'm still waiting. I do have a position, but it's not as big as I wanted, and I want to add. But the one I did today is EG. Yes, so I've been thinking about. I had my level at 83.10 for a while, and like my wife would say, I'm always a little bit early, and I wanted to get it in, get a little bit in now, and see how it goes. But I think my trade for this year, I think we're going to see. I've said before, I think people might think I'm crazy. I think we're going to see a little bit of euro strength this year, and
do you have a long-term target in mind still?
For yeah, I think we're going to get to 90 again.
Okay.
In EG, you mean? Yeah.
Yeah.
I think we're going to get to 90. That's a logical level. There's a zone around 86.5, 87ish, which will find some kind of action. But I think in with the horizon of 1 year, I think we're going to get to 90 or close to that. And that's because I also think that the UK and the Bank of England is probably most likely going to underdeliver. They hiked a little bit in December, and now the market's kind of thinking, they're going to keep going. Yes, inflation's high, but we know what the Bank of England is like, and the MPC, they're slow-moving dinosaur. They tend to disappoint most often, and they, for years now, every opportunity they have, they always err on the side of dovishness. They always have, with Carney, with Bailey, with everybody. And so I think the Bank of England is going to disappoint. And let's not forget the situation in the UK politically is still very delicate, and Boris Johnson is not doing well. And, all that. I'm not saying 5 years down the road. I'm just saying for 2022, I think there's going to be sterling weakness. And if you remember, I've been saying the opposite for, what was it, a year and a half now, when we were up in the 90s. I said we're going to get down to, that zone in the 83, 84 area, and here we are. So I think now chances are, and the way markets are thinking that the ECB is not going to do anything ever, I think this is really good risk reward. And of course I could be wrong, I have my stop below, and if I'm wrong, I'm wrong. And we move on to the next one. But I think this is going to be, I think the chances are pretty good. And, when you're a trader, you assess the risk, you assess the probabilities, and you try to understand or judge if you think that the market probability is lower than what you think it is. It's a bit like playing poker. So you have a hand and you assess what its chances of winning is. Of course, you can't know what the other person has, and you can't know what the market's going to do, but you play the probabilities. And if you do this the right way and you do it often enough and repeatedly in the same way, in the end, you should be winning net.
I'm going to disagree with you slightly there.
Disagree with me as much as you like.
I think that I'm with your premise on euro longs. We all three of us have spoken. Four of us have spoken about buying the euro this year, or how the euro is potentially going to be the trade this year, and I'm well on board with that. I think potentially the Bank of England is going to be a bit more panicky about raising rates this year, because they raised this 15 pips on the back of inflation worries, and I expected them to sell it more as just a reversal of emergency measures. So I think they could be a little bit panicky, but it should be short-lived. Maybe we get a couple of hikes and then they ease off. And
maybe they rehire Danny Blanchflower to mellow them out, right?
I think that's going to see euro sterling get down to certainly down to the 83s. That's my target for my shorts. If we get down to around about that 83.10 you were talking about, I'm going to take a big chunk off my long held shorts. And from there, maybe if we get down towards 81s, 80s, that's where I'm going to be thinking about starting to pick up longs. But the euro's looking terrible at the moment. Even amongst these end of year moves, everything else has bounced and sort of maintaining the bounce, but the euro's looking sucky. So I think we've got another shove lower down in euro dollar, and that will obviously,
where 110.5 would you be interested?
If we break that 112 sort of 111.70 area, I'm probably going to try a sell stop entry into there and look for that 110 area, and that'll obviously shunt down euro sterling as well, and that's when I'll probably maybe look to fold all my short in. I'm short from just under 92, and I'll fold that in and, like Stel, look to get long. So I'm agreement with Stelios on his positioning for the euro. My timing might be a bit different to his, but that's what makes a market, eh?
Yeah, and Blake talked about the market doing nothing, euro doing nothing last week, and pointed out that the market was no longer oversold. So, I mean, he used the Southwest Airlines analogy. You're free to roam the country, and after this, the euro was free to dump. So,
Yeah.
I'd like to get the professor's views. Hello, Steve.
Hey, Dale.
I saw you in there. Hey, happy New Year, bro.
Steve-o!
Hey, Steve.
Hello.
Yeah, Steve. So, what do you think going into the beginning of another year? Besides that, I'm old.
I think that this is going to be, I've said it at the end of last year, I think that this year is going to be a very interesting one because the market will have to finally face the reality,
Yeah.
which is going to be very different in comparison to some of the assumptions. I think that we might as well begin the year more or less continuing the themes that we've left in 2021. But I think we're going to see many different things happening as the year unfolds. I don't know if that's going to take a few weeks or a few months. It all depends, on several factors, obviously, as always. What I do know is that this year is going to bring at least a period that's going to be very volatile. So 2021, in essence, was a year that markets had no setbacks whatsoever. Actually, we've had no setbacks since the COVID sell-off, which lasted 1.5 months. But I think we're going to see something like this happening again within this year. Now, the FX implications are also obvious. Initially, that might end up being supportive for the dollar, so we might see the dollar remaining supported for a period of time. But I think that once the market starts questioning the assumptions I was talking about before, we're also going to see a return to dollar weakness. So, of course, the timing will have to do with how the Fed decides to handle the situation and when we will see the Fed and central banks doing a 180 turn, which I believe is inevitable. So, yeah, that's the main theme. So I believe for the time being, short term, no reason to believe that something is going to drastically change in the very short term. But I think that we have to be, on our toes because, the remaining of the year is going to bring very different developments.
Does this look like a 4 to you, Steve? I know you're not Grega, but
this definitely looks more than a bullish consolidation than some kind of a distribution, if that's what you're asking.
Yeah. Well, I'm asking, could it be a 4 with one more thrust, terminal thrust?
Yep. The most likely scenario, yes, is that we're going to see a bullish breakout to it.
Yeah, and that it might be if this is
and in any case, as long as we remain above 94.50, there is no reason to really be bearish.
Got you. Happy New Year, Blake Morrow. Thank you, Steve.
Hey, Dale, how's it going?
Hey, so it's
Hey,
great
Blake,
to
happy
be
New
able to
Year.
ask all these different, high level, high performing traders, analysts. What a crew. So,
Yeah, well, first of all, I want to say Happy New Year, team. It's good to hear Ryan and KMan since the holidays. Haven't heard you guys. Steve's good to hear your voice. I know you've had to take the last couple of days kind of off, so it's good to hear your voice.
We all have COVID.
I don't like, huh?
We all have COVID.
Yeah. Oh, did you test positive too?
No, but I definitely went through it. It's unavoidable. Also, we live in the same house. I mean, just imagine we contracted it just being in the same house with a person that had it and was asymptomatic. We all contracted it.
It's so funny. I've got a lot of friends that, like, I just got one of my friends just came back from Las Vegas because he was there for a bowl, American football, college football bowl game. He was there, and he he just got home and he's like, he's sick. And I'm like, did you get a COVID test? He's like, why? Of course I've got it.
Yeah.
You know what I mean? So that's basically, that means we're probably near this, the end of this pandemic, right? So
I think so.
Good to hear that you're doing well. And everybody, and it's Stelios. It's nice to hear your voice. Welcome back. Yeah, so you guys were talking about the dollar index, and well, first of all, let's go back to like your conversation regarding yields and bonds. And first I need to say, great call on the dollar yen with Ryan and KMan. I know these guys are long. We're now Ryan and I were having this conversation in the chat room. I'm looking at this data feed comes from F.A.C.E, which isn't the end all be all data feed with the dollar yen. So just keep that in mind. You'll find little different data points depending on what feed you're using. But looking at the 2000, or this is the 98. I thought it was the 2000 highs. 98, 2015 highs. We're coming in very close to a weekly trend line, and just you got to keep that in mind if you're long dollar yen. Now going back to what Dale was saying today, as far as yields go, this is a yield like kind of trading view. What do they call it? Not ETN. I guess ETN is it? What is it?
CFD.
CFD, that's what it is. Yeah, you guys, all you Europeans get to trade these CFD products, and that's the CFD product of the 10-year. But if you look at the 10-year bond market, like if you look at the the 10-year, we're actually breaking through some support here. So I look at the markets and with bonds selling off. I mean, yields look like they're going to rip. They're going to rip higher. So that's going to have naturally that bullish inclination to the US dollar, Japanese yen. But I was looking at all these other yen pairs too at the same time, and you got the euro yen that's after respecting really key support. What's a bummer about this euro yen? I was wiggled out right here. I was long at 128, and I was long initially down here, and it just didn't end up going anywhere for a couple of weeks, which frustratingly I got out of it. But it really pivoted off the levels it should have, off this multi 10-year trend line, this green line that you can see here. But we're back at the 618 retracement of the most recent range. So you got to be a little careful. I think, you got euro yen, which is probably one of the bigger yen pairs. Sterling yen's getting up towards that 88% retracement. The Aussie yen's struggling around the 618 retracement. You can see it right here. New Zealand yen also, we've been trying to double bottom playing off the 200-day moving average, but it's, the Kiwi doesn't look all that hot. And the Canadian yen, we're firming up into some, previous resistance. So I guess I'm trying to point out that these yen pairs look pretty bullish, but we are, getting towards resistance here. And I think you got to be cognizant of it. You got to be a little aware where we're at. I just tweeted on the Forex Analytix Twitter handle that we're at the 127% extension of the 2000, or this is the 115.50 high, 112.50 low, 127% extension of this move. I would be careful chasing the dollar yen up here, but what I think, if you guys are really bullish and you're bullish yields and you think the bond yields are going to continue to rip higher, you want to buy it on a dip back to 115.50. I think this is going to offer the best, risk reward for longs if you can get a dip. That's the question, is if we're going to get a dip or not. But going back to Dale's comments a little earlier, him and I were talking during the break. A lot of you guys were out, and we were talking about the euro. And one of the things that him and I talked about is that the RSI is back at mid-range on the daily chart. Everybody's like, "Oh, the euro, it's oversold. It can't go any lower." It's like, no, it's not oversold. We've spent the last month and a half working off technically oversold conditions. And while we're below this, like this descending trend line that comes in, right now about 114.50 roughly. While we're below that, I don't think there's any reason to be on the long side. Now, I've talked to a lot of people, with the Trader Summit website. Talked to a lot of bulls and bears in the dollar, and there's not very many dollar bulls right now. Everybody's being pretty contrarian about being dollar bullish. There, a lot of people
What
are
reasons
leaning
are
out.
they giving, Blake?
Well, the reasons are this is an exact opposite but repeat of last year. Positioning's really bullish the dollar. Everybody's universally bullish the dollar, so we got to get bearish. Well, the market fell for that last year. Last year everybody was very bearish the dollar. The dollar reversed and closed the year at its highs. But I'm gonna point out something, especially if you guys have been following CFTC data for the last 20 years like I have, things can get overbought and stay overbought for a long time. Things can be, you can get sentiment stretched for a long time. So just because everybody's flipped to being dollar bulls, that doesn't necessarily mean you should be bearish yet. I mean, we could be the dollar bullish sentiment can stay that way for a while. I'm not necessarily saying that you shouldn't be a dollar bear, but I think you got to be really careful while the euro is trading, where it's at. I think once again, if we get back above 114.50, that's a change. That's something that maybe it's interest rate expectations have shifted a little bit, but I think you've got to be real careful. You look at the euro, it just, moves up against resistance and it gets swatted back down. And like Dale and I were talking about that old Southwest Airlines commercial. If you're in the United States, when that you hear that ding and it says, you are now free to move around the country. Well, same thing with the euro. The euro was oversold, back here in November. And we worked off those oversold conditions, and now the euro is back to neutral. And I think you got to be a little careful here. Look for reasons, and right now, until we get some better ideas about the central banks and what they're, what the Fed's thinking, what the ECB's thinking, I think you got to be a little careful. Now we do have jobs data coming out this week. Do you guys have any opinions about? We have ISM coming out later today. We have obviously ADP and more, additional data that will give us some clues. Do you guys have any opinions going into this week? What the jobs report is going to bring, and do you care? What any thoughts here?
I haven't looked at it yet.
What's that?
Haven't looked at it yet. I don't know.
Well, you just got up from your 2-week slumber. So anybody else have an opinion?
Expected 400K. I think it depends where the yields will be as the report come out. If we back down to, let's say, the 10 years at 160, let's say, or 155 in the middle of the range, the report might not be that important. If we are on the other side, trading really close to 170, and a good report comes out, it might be the trigger for a maybe short-lived but a violent leg higher in the dollar. And it's just a thought.
Okay,
I think it's the same as it has been the last few months. If it's not horrendously bad, it's good. Whether it's a 50K, 100K, 500K.
Yeah, as long as we're not seeing any major reversals in job creation, then you're not really too worried about it, right?
Yeah, if we come in with a sub, minus 100K or something like that, then the market's going to flip out before looking for the excuse.
Got it. Stelio, Steve, you guys have any opinions there?
I don't really have anything to add. It's pretty much the same.
Okay.
Here.
All right. Well, one of the other things I think we should be pointing out is watch the S&P here. And while the S&P is above, this 4750 level, I don't think there's any reason to be bearish. I think a lot of people are coming in this year thinking, hey, I got to sell stocks. I mean, what the hell are they doing up here? Actually, I had a buddy of mine. He was texting me yesterday. He's like, the stock market's on, just you can't short it. And oh my God, have you seen Tesla since December? I forget what the hell he texted me. He's like, since December 23rd or something like that. Or what day are we in? December. Yeah. So he's like, oh, Tesla's up. 15 or 20% or something like that. He was complaining, about where Tesla's at. Oh, he was saying since the 21st of December. That's what he is saying. Since the 21st of December, Tesla's up 30%. And I'm like, yeah. I'm like, what? So what are you going to do about it?
Since November, it's flat. I mean, you pick your time.
Yeah, I mean, I think he was just pointing out that in the last couple of weeks, it's up 30%. But it's like, what do you?
Did you tell him not to live in woulda, coulda, shoulda land?
Well, here's the thing: is you can complain about the market you're in, or you can trade the market you're in. I mean, so pick your poison. And I mean, if you're going to complain about the markets we're in, then go somewhere else.
Yeah, no kvetching allowed in 2022.
That's right, Dale. I agree with that. Hey, listen, I know, and by the way, just technically, and I don't know if this is going to play out, but technically, this does take us to new highs. So just if you guys are want to be really specific on technical analysis with Tesla. I don't know about that. I mean, Tesla's not something
it looks like it's on its way to Mars.
I mean, it does, but then the flip side of that is, or not the flip side, that it just, to complement that look, you look at the S&P, we're still breaking out. And I still think that the risk is that the S&P trades up to 48, this 48.92, the 161% extension of this last move, which this will be that ascending trend line. I still think this is the risk. And, that would probably say, hey, if Tesla's hitting new all-time highs, I guess the S&P would probably be reaching for those levels as well. The one thing I do want to point out is I don't think you should be bearish the broad market until you get below 4750 in the S&P. And while we're above that, just, I mean, look at what's happening with yields. Look what's happening with, the yen. This is all saying that the market at this point in time is absorbing these higher yields. Now, as Stelios has pointed out since beginning of 2021, once the 10-year gets above 2%, that market might get a little shaky, and we're still quite a ways from there. So just keep that in mind.
That is correct. I think
I'm done, Dale. I'm finished with my rant.
Finished?
Well, I know you have your interview coming up. Hey, I just want to mention this, guys. This is your last week to actually try out Forex Analytix for $1, because probably this weekend we're going to go live with our major discount pricing that we do every year. That means that when we discount our prices and you get a substantial discount on the monthly and semi-annual, annual subscriptions, we do not give out our $1 trial. So if you want to try it, this is the week to do it. You want to join one of the most active communities in the FX market, or in any market for that matter, come join our chat rooms where we talk about macro and technicals and talk about trades that we're doing, and Spanish chat room, news and research. We have like one of the busiest and biggest communities in the markets, that we don't talk about religion, we don't talk about politics, and we're all very friendly to each other, and we just talk about what we're trying to do here is rule the trading world amongst us traders. So and screw the algorithms. That's what we try to do every day, right, guys?
Yeah, good goal in life.
Yep.
All right. With that being said, you guys, Dale, have a great interview. Hey, happy New Year's, team. Glad you guys are back with us, and I'll see you guys in the private Morning Edge webinar in about 40 minutes.
Thank you, Dream Team. Thanks, guys. Glad to have everyone at full strength. We have the whole team. It's really nice for that to happen occasionally. Anas El Haji,
Good morning.
my trading warrior brother. Happy New Year, buddy.
Good morning. Happy New Year to you.
I appreciate you coming
And the
in.
team.
Thank you. I appreciate you coming in. Are you going to be showing anything, Anas?
No.
Okay, well, I'll share. Yeah, I'm gonna, so we could put up WTI and talk about it. So, all right, why don't you give us a quick recap of what you thought the biggest developments were last year leading into this year? And, you know, you have become famous for your expression that OPEC doesn't manipulate oil markets, they manage them. So they were pretty well managed last year when you think about the kind of run we had, because we didn't peak until, you know, this fall. So 2021 was a well managed market. You had some pullbacks, but, you know, overall uptrend. So how were they successful in doing this?
Sure. I will focus on that. I just want to reference something we discussed, I think, a year earlier from now, which was no $100 oil in 2021, if you recall.
I recall. Yes.
Yes. So that was another one. And when people talk about the most important development or developments in 2021, they usually bring the knowns. But really, what we know is not the most important development. It's not it's the things that are not expected. So it's not the demand recovery. It's not the increase in production to meet demand. It's not the rise in oil prices. All of this was expected. It is not Biden's request from OPEC to increase production, and not the release of oil from the SPR. I know that some people in the media may be interested in these issues, but these are not the most important development. Historically, US presidents asked OPEC to increase production. Historically, US presidents used the strategic petroleum reserves, the SPR. Then what are really the most important ones? When we talk about the most important ones and why we focus on them, because they are unique in different ways. We are talking about events that are not predicted, events that are not that common, events that are unlike anything in the past, and they have and they are even different from conventional wisdom, and they have significant impact on the markets today and the future. And with that, everything people talk about basically are the symptoms. When we talk about increasing prices, when we talk about increasing demand, these are really the symptoms. So what are the most important events? In my view, the most important events are the development within the development of thinking within OPEC Plus. We have two issues here regarding this. The first one is, it's not really the market management per se. It is the refusal of the large oil producing countries with spare capacity to compensate for members who cannot meet their quota. Because one of the problems in OPEC historically, before OPEC Plus, was when countries couldn't meet their quota, other countries infringed on their market share and increased production and took over. And that always created a friction within OPEC. So that's no longer the case now. Those countries are respecting their quota and they are respecting others' quota.
Why? Why now? After all,
well, now that's the new thinking. This is going to affect market structure. This is going to affect everything related to OPEC behavior, simply to keep the unity of OPEC Plus. You have 23 countries together. They work really hard to achieve what they achieve, and they don't want to break it like they did in the past, because this was one of the mistakes of OPEC within a period of about 25 years. where
Well, I mean,
the
if
la-
they're that tight in us, why is Saudi putting in missile bases and testing, ballistic missiles?
well, in a sense, that's a completely different issue related to the security of the country and security of the oil fields. But the idea here is
Okay.
not infringing on the market share of others is really one of the most important development in 2021. The other one, the second major development is what we've seen in Asia and Europe is this substitution among energy resources that we never have seen before. So we ended up with the Chinese government, for example, imposing certain environmental regulations. As a result, the coal production declined, and then we have the floods. As a result, demand for natural gas increased, and demand for LNG increased. Gas prices increased, especially in the spot market, increased to record levels. And as a result of this increase, we've seen switching from natural gas to oil. This substitution among energy sources is amazing. And this is one of the characteristics of 2021. If you look at Europe, one day we don't have wind. What they did, they resorted to coal and natural gas. Prices of coal and natural gas went up. Some power companies went bankrupt. And all of a sudden we've seen switch, like in Sweden, they returned back to oil. In some countries, they returned back to coal. So that's another characteristic of the substitution among various energy sources. The last point
Is this why
is-
natural gas prices came down like they did from the peak, maybe a week or so before WTI peaked out?
Well, there are several reasons for that. One of the main reasons is the U.S. LNG exports. As you know, they sent a massive amount of LNG to Europe about 2 weeks ago. So that was the major impact there. But the third point is the most interesting point in my view. It is about shale, and it's not about the inability of shale producers to increase production substantially with higher prices. It is really the hedging that is the new phenomena that we are going to see forward. Because what we are going to see, if we have time, I can discuss the 2022 outlook. If we are going to show is, we are going to be range bound in 2022, but we are going to see within that range bound some severe fluctuations as we've seen in 2021 over one day. Like one day, all of a sudden you have this massive drop, like $10 in oil prices. That's because of the hedging, because of delta hedging, and sometimes delta gamma hedging too. So
it's happening everywhere. It's happening in every space. It's happening in equities. And now you're getting the gamma theta in oil too in us.
Well, in two, it's bigger. And the reason why, because before shale, we did not have it. With shale producers in the picture, what they are, especially the medium size and the smaller ones, they have to hedge for various financial reasons. And when they do the hedging in various ways, whether options or any other choice, basically, and prices drop below that level, we know the other side is going to react to that. And the reaction is going to be just selling more contracts, and prices will drop, and then it's going to hit another mark, and that's going to continue throughout the day. So that's another phenomenon we've seen in 2021 that's going to continue with us. So I think these are the three major events in 2021 that is shaping the future for the oil market.
Okay. All right. And you were pretty accurate on average price and the $78 level. Attendees are putting it up there. So people remember what you say in us.
Thank you. Thank you. On 2022, in general, this is kind of a big issue when we talk about averages. I really don't like to talk about averages, but people always ask about averages. As you know, if we talk about oh, what the average price for 2022.
You don't have to talk averages here with us.
Correct. But I'm talking about the audience. I'm talking about social media. I'm talking about general events, conferences.
You're with a bunch of professionals here. So,
Correct. Correct.
You know, so you know, we don't care about averages. You can't trade an average, can you?
Correct. No.
All
no.
right. Okay.
No. So generally speaking, 2022 is going to be tighter than forecasts, and this is especially important because OPEC forecast until last week was a loose market with major surplus. Now they changed their view.
How can they do that in a week?
Well, it's not about a week. People have to realize, and I think if they take that just this point from us today, from this meeting, this is very important. OPEC manages the market not only through outputs. OPEC also manages the market through information.
Okay. Yeah, so you know they can get they sway the way people position themselves in the market by their jawboning.
Correct. So they are not really.
They're like the Fed of the oil market.
Yes, yes, in a sense, in a sense.
Okay.
Although I
like that.
I wrote an article a long time ago that OPEC is not the Fed and what are the differences.
Really?
But
Wow.
but I had to kind of keep it down on this front.
Okay.
Right. So
I don't have to be careful. You know, it's our show.
Correct.
We have freedom at least for a while longer to say whatever we want.
I mean, I do the same. It just sometimes you have to keep you have to keep your connections.
Yeah, and unless I want to just keep it, you know, keep it a secret and not share it, you know what I mean? But
Sure.
you know, I know you wanted to talk about 2022, but you know, here's I think a quandary a lot of people have right now. They're the technicians and they're fundamentalists. And, you know, as you know, I was tweeting you when it was up here, you know, and I just felt it was done and we were going to have some type of correction, not a big bear market call or anything. And, you know, I'm just a neophyte. And, you know, before Biden announced it, I thought that he would do something, you know, foolish, silly, and release the SPR. But now, you know, technicians, there's kind of a battle going on. Like a technician would say, Anas, this is probably a failing rally, that this could be a great shorting opportunity. But I could also see the case that we could blow to new highs in here too. So, you know, when a market's in a position like this, it's for me an IDK, I don't know. Do you have a bias as to whether or not there could be another wave down, or are you more in the camp that we're just going to grind up to higher prices?
I am of the camp of a range bound prices unless we have that delta hedging going on and it will last only for a day.
Okay.
But the issue here is this, and I need to clarify this because some people on Twitter were a little bit upset on this. We have forecasts, we have scenarios, and we have the sweet spot that I talk about, and that's a pinned tweet on my account. These are completely three different things. Forecast, when I say I predict oil prices to go to $95, this, that's a forecast. But if I say something like, if Saudi Arabia does not increase production and Russia does this, and then they do this, then oil prices will go to 100, that's not a forecast. That is a scenario.
Yeah, it's a narrative.
Correct. And the third one is the sweet spot. The sweet spot basically is just a description of what is the best choice for oil producers and oil consumers. So the sweet spot is not a prediction. But since I posted that, it is very clear right now that the sweet spot, which is between $68 and $75 for Brent, is becoming kind of a center of gravity. Every time we deviate from that, we go back to it. So that's the only connection related to the market about the sweet spot that is becoming a center of gravity. And in addition to other information and the other modeling, it is clear that there will be range bound in this case in 2022.
Okay. So before we went on today, you sent me some of the things you wanted to talk about, and I think that people are going to be pretty interested because, I mean, look at what Tesla's doing today, and all the EV stocks that have been, you know, speculative moonshots. You know, a lot of people buying into the argument that, you know, oil is becoming a thing of the past, and EVs are going to come here and, you know, have a big slash of demand for gasoline because of EVs. And you've got an example of where that's not exactly the case. Correct?
Yes. Yes.
Yeah. So did you want to go there now and talk about that? Norway?
Yes. Sorry, because I've been, my phone is kind of ringing off the hook because of that OPEC meeting going on right now.
Oh, okay.
And it just ended.
Tell them you're talking to Dale Pinkert.
Well, if they listen to me, it's most of the time it's a one-way street.
Yeah. Okay. So do you want to talk about
so
that?
In Norway, basically, this is kind of very interesting phenomenon because those who are pro EV and what I call the prophets of climate change. When we talk about prophets of climate change, we are really talking about the extremists here. I mean, all of us are really, we want a cleaner air, cleaner water. All of us want that. But we don't want to go to the extreme for a simple reason, because we need a balance between energy security and environmental security. If you sacrifice energy security at the altar of climate change, you are losing both. You are not going to get environmental security. You are not going to get the energy security in this case. So the whole issue here is this, that they brag about Norway. The problem with bragging about Norway selling basically in the last month, I think 91% of car sales were electric in Norway. And they brag about it as an example. Well, it cannot be an example because Norway is one of the richest countries in the world. They have the money. And also they have one of the highest taxes too. But the point here is this. With this massive increase in EVs, you expect a decline in oil demand. You expect a major decline in gasoline consumption. You expect a major decline in diesel sales, especially that more than 55% of cars on the road in Norway historically run on diesel. And diesel car sales in the last 10 years have been increasing. You look at the data for November, diesel consumption went up.
Yeah.
So how in hell this happened with all those EVs? And not only went up by 7%, which is massive by any standard. Now you say, well, this is year over year because of Corona. Well, even month over month, we've seen an increase. Although they have a footnote, and the footnote says you cannot compare the data after 2020, before 2020, because they did some statistical changes. You look at gasoline, which has no statistical changes. The decline year over year is only 5.2%. So how you have massive increase in car sales where you have 90%, 91% of car sales are electric, and gasoline consumption declines only by 5.2%.
Because they're keeping two cars, the combustibles.
Absolutely. So what they are doing
for
is
distance, because
not only two cars.
Yeah.
For long distances, they are still using their diesel cars.
Right.
So there is a big lesson. You want to brag about Norway? Let's brag about it and talk about reality on the ground. So to conclude from Norway that all demand from transportation is going to be erased completely, a complete nonsense.
Yeah. Yeah, people, the battery ranges are still part of it, and it takes time for people to let go of something that, they've
I
been
can
used.
tell you one thing. If
What?
the government of Norway stops selling oil, so they will not have enough money to subsidize electric vehicles,
Oh, yeah,
sales of electric vehicles will decline by 90%.
yeah, yes. That's their piggy bank.
Absolutely.
So they want to be green, but they're a major oil producer.
Sure.
So there's so many contradictions out there now. So it's kind of like the elephant in the room, and I don't know if you have a feeling about it, but I've heard, and I know that Joe and Vladimir are talking on the telephone and writing letters to each other, and their diplomats are gonna meet. But I've read that by the end of January that um, Putin will have 180,000 troops there on the border, and you don't move those kind of troops unless you're going to use them or you're playing a game. What would happen to the oil market if he invades Ukraine?
I mean, generally speaking, as you know, you guys are traders, people are going to panic and we will see some increase in paper barrels, money, and prices.
It
But
wouldn't be
not
long lasting. It would just be like a news event, last for a day or a week.
correct, correct. And basically it's not going to be more than that. But the issue here is this. The issue is if they are going to impose sanctions, what type of sanctions they are going to impose, and whether that's going to affect natural gas exports to Europe, whether they're going to
Yeah.
affect oil exports to China. I think it's the ramification of it, not the event itself. It's what type of sanctions they are going to impose, and whether they are going to exempt natural gas to Europe, for
Because he
example, or
has
not.
leverage. He has leverage on the Europeans to heat them for heat the rest of the winter.
Big time, big time. In fact, this is not only even on China right now. I mean, we have a problem with one pumping station on the Chinese border, on Russia on the Chinese border, that lowered gas exports, natural gas exports to China, and that caused a major problem in China. So even in China, he has a leverage.
Okay, so 2022, any big event or surprise or anything that you're
Well, two
you're looking
things
for?
on
The
22.
trend remain basically positive because of shortage. Supply isn't as large as people think.
Let me say it in 3 points, basically. The first one is now the oil producing countries have money because of higher prices. That's going to stimulate their economies, and that's going to increase their oil demand. So the oil exporters are going to have higher oil demand, which means that it's going to put pressure on exports. That's number one. Number two, we are going to see basically kind of support for high prices, but I don't see yet $100. I know this is going to anger some people, but there is no support for $100 so far for 2022. Any talk of $100 oil or higher, it has to be 2023 and after because of the lower investment thesis and all the other factors.
Okay. All right. And we're having one question, if you could just
Sure.
cover it quickly. Your thoughts on carbon credits?
I am really not the best person to talk about
Okay.
this here. It needs kind of an expert on this one. Just one general comment on ESG, carbon, and carbon neutrality, that we are looking. I am studying the behavior of companies and countries, and I can tell you it's another Enron.
It's another what?
Enron.
Oh, I remember him. Okay. Yeah, just say what you think, Anas. All right, don't pull any punches here.
All right, well,
So,
but
all right.
I mean, generally speaking, I mean, when you see people literally this accounting, the carbon accounting game is going to be the largest scam we are going to see in the coming years.
Okay. All right. You've heard it from Anas El Haji, my trading warrior brother, someone that when you want to know about the oil market, you use as a resource. And you can find Anas on Twitter at Anas El Haji, and anywhere else.
The website with the same name, ANASALHAJJI.com.
Okay. And
for the audience, basically, because I post in Arabic some really interesting materials and forward from others, they can just press the translate button. Twitter has a translate button, and the translation has improved substantially within the last year.
Thanks for going bilingual, Anas.
Thank you.
All right. So Anas El Haji, thank you for your time. Great way to start the year off with your views on oil. We appreciate you sharing your
You're welcome.
hard work with us, buddy. All right.
Bye-bye.
All right. That's a wrap, everyone. So this was Tuesday. I'll see you for turnaround Wednesday, and you could join the crew. I'm glad you enjoyed it, Rick. Yeah, he's pretty straightforward. He doesn't pull punches. That's why I like him. And you could join the crew in 15 minutes for the morning edge. And all these interviews are recorded. If you ever want to go back, you just go to our YouTube channel or on the website, you'll find them all. And you can always go back and listen to something. I do it sometimes, a guest, and I think I remember what they were saying, but I really want to find out. So I go ahead and pull it up and put on my headset. So good luck the rest of the day, everyone. And before I go, I want everyone to declare it. Since I can't hear your voice, I can see your text. Why doesn't everyone write 2022 is going to be my best year yet? You're welcome, Tom. 2022 is going to be my best year yet. Declare it, at least write it down. And let yourself hear it. My best year? No, your best year. Thank you. Yeah, hope. There you go. All right. All right, take it easy. See everyone tomorrow. See you, Majid. All right.